When assessing the outlook for the year ahead, it's clear that businesses around the world will be facing pressures. Higher wages, higher energy prices, and supply chain bottlenecks that raise input costs all look likely to persist well into 2022. In some shape or form, although the impact of these factors will not be felt evenly. To conclude our series with the outlook for equity markets, we'll start with Chris St. John, manager of AXA Framington UK Midcap Fund, who gives us his views for UK equities.
What I would say is that UK equities are cheap relative to global equities, even when you consider the sector bias within the UK equities still look attractive. What I mean by that is a dollar of earnings generated in the US is valued much more cheaply on the UK market than it is in the US market. So notwithstanding the UK stock market construction, it still looks cheap on a like-for-like basis. And I would argue it also looks cheap on an absolute basis as well. And this, in terms of evidence, I'd point to the M&A market, which has been very robust in the UK this year. We've seen almost a record number of companies taken out in terms of taken over on the UK market. And I think when you combine this with the underlying fundamentals of the businesses we look at, this bodes well. Earnings forecasts appear to be prudently set after a significant rebound in earnings this year, particularly given the GDP growth forecasts in the UK. Balance sheets are robust, and within the listed equity space, although current macro and microeconomic environment will be problematic for some businesses, there are plenty of companies whose competitive position has improved in the period since.
Andreas Zollinger, manager of BlackRock Continental European Income, is equally as positive on European equities heading into 2022.
There's clearly a lot of risks in the short term, but the most important thing for me is really that the end demand remains strong, and that is what ultimately matters. So what we've done as European equities investors over the last few months is to talk to a lot of cyclical companies to get a feeling for end demand. And the feedback has been pretty clear and pretty consistent that demand remains strong. And actually, in many cases, the end demand can't be satisfied right now, which provides us with a bit of pent-up demand for 2022 also. And then the last thought from me regarding 2022 is that also from an income perspective, and I do run some of the European income funds at BlackRock, there's still quite an attractive yield gap between the risk-free rates and the dividend yield of the European equity market. So a focus on high quality, cash generative companies that provide resilience when it matters, and particularly during somewhat difficult macroeconomic times, that is definitely one of the big topics for us also going into 2022.
The U.S. is coming off a very strong period of performance, but can it continue? Bob Kaner, manager of Schroeder U.S. Midcap, gives us his views on the outlook for U.S. equities.
As you look forward, I think similar to environments that you saw post the 2003 or the 2013 big recovery, you can expect to see a period of really more normalized returns with greater dispersion, which tend to be really good environments actually for active managers. So that's how I think about or at least the outlook going forward. I think that the returns that we've experienced over the last 12 to 18 months have been fantastic, but I think it's unreasonable to assume they're going to continue at that pace. And you can expect the market to generate returns kind of more normalized that we see over much longer periods of time.
Asian markets are a little more mixed, according to Jason Pidcock, manager of Jupiter Asian Income.
Be a little mixed. So some of the markets are looking a bit expensive, such as New Zealand and India. But there are plenty of markets around the region where we find companies that offer good value. And we still like the more developed countries in the region, such as Taiwan, Singapore, and Australia. So the more developed markets where there are companies that have world-class businesses in many cases, or at least regional leaders. We do think pricing power for businesses we invest in will be very important, particularly with a more inflationary backdrop, where their own raw material prices may be going up. And therefore, in order for their margins not to be squeezed, they have to be able to pass those price increases on to their customers. We do think balance sheet strength is important as well, particularly in an environment where interest rates may be going up, albeit we do think real interest rates will remain low for some time. So on the whole, we're feeling fairly constructive for the markets in the region, but we do think that it's a case of picking the right businesses.
And to wrap up, Jean Mali, economist at JP Morgan, gives his views on emerging market equities heading into the new year.
Now, the 2022 earnings outlook for EM and for China in particular is expected to be quite healthy. And so against a backdrop of pretty reasonable valuations for those two regions, this suggests we should be optimistic about equity returns for emerging markets in 2022. Now, we're not complacent to some of the risks out there, and so some caution is sensible. If it could mean that EM equities again underperforms developed markets as it has done through 2021. An ongoing disruption is likely to impact EM more than the developed markets as a result of the less broad coverage that we have at the moment. And
overall views on equities remain robust over the next 12 months, despite the possibility of further disruption to supply and demand. Typically, unexpected shocks tend to raise questions about the ability of the global economy to sustain its pace of recovery. This in turn triggers buying of assumed safe haven assets, generating counterintuitive moves in bond yields given the backdrop of inflation and higher interest rates that we've previously discussed. This video concludes our Outlook series, but we'll return in January with our weekly manager interviews. So remember to like and subscribe for future videos, and to learn more about any of the funds mentioned in today's video or to get more of our Outlook content, visit our website fundcaliber.com, where we have access to articles, podcasts, and more videos.